everyone, and welcome to another episode of Wealth Investor. My name is Yuri, and if you are new here, I am Wealth Investor, and you are watching another episode of Wealth Investor Show, where I document my portfolio, my high growth long term portfolio. I document my progress, I document my losses, I document everything that goes within this high growth portfolio. And as currently you can see, I have a number one holding is Tesla, and today is not doing so good. And actually, I'm excited because I picked up another share this morning, and so far, there is my gains on Tesla altogether, max gains, and I have 12 shares of Tesla. So here's the update on my portfolio very quick. We are still outperforming Dow Jones, but actually today I would like to discuss different strategies on building long-term wealth. And I'm just starting out, and I need to make sure that my thinking is aligned with my goals. So the goal of this portfolio is 5 million, so I want to grow this portfolio as fast as possible. It's sitting about 13,500, but actually today I want to take a look at different strategies out there and hopefully help you decide what is the best strategy for you to grow your portfolio. And I started this portfolio back in November of 2020. So I'm at the very beginning of my journey. So if you would like to follow this portfolio, make sure you smash that like button and subscribe so you don't miss my future episodes. We all wish we started out early in life, but the best time to start is right now. So this YouTube channel is documentation of my long-term high growth portfolio with the goal of financial freedom in about 10 to 15 years and also ability to continue building wealth by investing into high growth assets like Tesla stock, cryptocurrency, and real estate. But this is my plan, and in this episode I would like to review different investing strategies that suited for different risk tolerances. During the past year, watching the stock market crash and then recover literally in the same year, I realized that I should be investing. I should be putting my money into the stock market and building wealth. And I end up realizing this one mentality and psychology when it comes to growing a long-term portfolio. And my basic outline, my basic strategy is make, invest, retire. It's very simple strategy and it works. You make money first and live below your means. You take the excess cash and invest it. Invest it into index fund, high growth stocks or real estate, crypto, wherever your risk tolerance is. And then you retire. When you're ready to cash it out, you can, retire, put it in either in dividend stocks or just take it all away and you can retire. But that's my basic strategy: make, invest, retire. But before we dive into different investing strategies, I want to address day trading, short-term trading, and swing trading, and pretty much timing the market. I tried it, okay? And now I'm a long-term investor. No wonder why. Well, actually, I made some money. I made like $2,500, but then I lost it all. I literally lost it all, and I stopped at break even, and I didn't actually lose a lot more money. But oh no, wait, hold on. Let me just check this account here. Let me see. See all of these losses and some gains? I think lost minus $180 on day trading on this account, and was after I quit day trading. I thought it was exciting and I thought I'm gonna jump back in, but as you can see, I've been losing money. This is all day trades from here, from bottom all the way to Facebook here. My main holdings, my long-term holdings, is Tesla, Apple, Microsoft, and Facebook, where the Tesla has the highest conviction. So I actually lost money by day trading. I like the rush and excitement of winning, but the losses would really get to me emotionally. So I decided to be a long term investor, and the key word here is investor. I actually enjoy investing into companies who ran by visionaries that support the better good for this planet and humankind. I still paper trade from time to time to see how good am I at picking winners, but the more I do it, the more it feels like a zero-sum game, where consistent wins get erased by bigger losses at the end. Everything in life is risk to reward ratio. The more risk you take, the more reward you get in the future. So, based on my risk tolerance, day trading is the riskiest thing I can do with my money. The key here is calculated risk, and I am bad at predicting penny stock movements, so therefore I stay away from day trading. And there is nothing wrong with day trading if you can do it. If you actually can outperform the market, you can outperform the taxes, right? And the long term trading, then go on. Go for it, you know? Maybe you're good at it. Let me know in the comments below. So it brings me back to investing. Back to our plan make, invest, retire. So here are the steps in order to achieve this plan. Well, the number one thing that everyone needs to do is to get money. So how do we get money? Is either we're gonna get a job, we're gonna get a W-2, or we can go hire for a career job. We can go to school and get a career job and progress in a career. And the number three, which is the riskiest, is to start a business. There's, of course, might be a combination of all of these, but depending on your risk tolerance, the safest is career. Then you can have a like McDonald's job, something that doesn't require higher degree. And the riskiest out of these is starting a business. If you're a person with a high risk tolerance and want to make the most money, which is you want to reap the highest reward, then start a business because the higher risk you take, the bigger reward you will get. But remember that risk needs to be calculated. Don't start a restaurant just because your girlfriend says you can cook an omelet. For example, if I take myself, I am self employed. So therefore, I have a business. I run a business. So I can do a lot of things with my time. I don't have a W-2 job, which would provide me with consistent income, but I do have clients that I do digital advertising for on a regular basis. And in fact, one of my clients has been with me for 3 years now. So, based on my risk tolerance, I have a stable job. Also, because I am self employed, I do Uber deliveries on the side, which gives me an additional stream of income and a handsome car tax write off at the end of the year. So it's really based on your risk tolerance. Which path do you want to take? But there is no escape from this step because at first you need to make money in order to invest that money. Now, once you are making money, it is important for you to live below your means because if you constantly live paycheck to paycheck, or even worse, if you live above your means and you are in debt, then you don't have an ability to invest money because all of the profits that you might get from investing will be eaten out with debt. So you don't have money to invest. So therefore, we have to live below our means. And this is all going to depend on your risk tolerance, right? If you have a stable job, then maybe you shouldn't buy a new BMW. So when you get yourself a stable job and a lifestyle below your means, then you want to invest all excess cash into one of these or combination of these options. So we can put our money into index fund, we can put our money into dividend portfolio. Also, we can pick stocks, which pretty much what I'm doing. And there is crypto, and there is also real estate. I think these five are the most attractive options that exists right now. And of course, everything is going to depend on your risk tolerance. So if we take index fund for instance, this is you just buying bunch of companies, you buying S&P 500 and diversifying your portfolio, which is the safest way to invest. But also, since you don't take much risk, then you cannot expect higher returns than S&P 500. If you want safe strategy, then index fund is a good idea. Also, people like to invest for dividends, which they build dividend portfolio. This is a relatively safe strategy as well. It's a bit riskier from index funds because now you are narrowing down your picks to maybe like 40 to 60 companies. You diversified, and you're trying to get your average dividend yield for the sake of income. This is not as safe as index fund, but it is relatively safe considering other options on this list. Then some people like me like to pick stocks. I like to pick stocks, and that's why I'm growing this high growth portfolio. I like to identify high growth companies that I have high conviction in and invest in those companies. This strategy is higher risk, of course, because now, as you can see, I have only 4 stocks in my portfolio, and actually Tesla is weighing like 57% out of all of these. So I'm really heavy in Tesla. I'm not diversified at all, but my hopes is that I'm gonna concentrate my cash into few companies that have potential of 5x, 10x in the future. Of course, I take higher risk, but I could also expect much higher reward at the end. So this is much riskier, but it's still not as risky as cryptocurrency. Right now, cryptocurrency is very speculative, and a lot of people make money in cryptocurrency. I'm still trying to educate myself, but it gives me a lot of confidence that Tesla bought $1.5 billion dollars of Bitcoin. So it gives me confidence in crypto, but right now, as you can see, I have zero crypto. So I don't hold anything in crypto. I don't have other wallet that I have crypto, which I think is gonna be interesting. But therefore, this crypto thing is the highest risk right now, uh, unless you're gonna day trade, right? But really, nobody knows what's going on with crypto. Like Bitcoin crashed 8% today, so you don't know. And also, on the other hand, we have real estate, which some people would argue if it's risky or not risky. But right now, I'm not messing with real estate at all. I am planning to buy at least one house so I don't have to pay rent. Currently, I view real estate as high risk because, first of all, when I'm investing in Tesla, I can invest, buy shares, hold it, and do nothing. When I buy real estate, I'm building wealth, that's number one. But number two, it's a huge liability because now it's all on me to maintain that house. When I invest in Tesla, I don't have to do anything. I just watch it grow and buy more. But with real estate, you actually responsible for that property, responsible for maintenance, for everything else. So currently, I am staying away from real estate for at least, I don't know, 1 or 2 years until I get enough savings for the down payment. But I do actually want to buy real estate because it's a good wealth booster. It's a very good wealth booster, and you can get 3% down on a property and get yourself a $300,000 house and control $300,000 with only $10,000, which is very cheap leverage, right? And the rates are down, so hopefully they're gonna stay down until I buy the house. So if we take all of these investment scenarios and compare them to each other, it's going to come down to your personal risk tolerance. The highest return is going to be in the highest risk assets. So, of course, the highest risk asset, at least in my mind for now, is day trading. So, of course, you can make a lot of money in day trading, but also there is risk. You can lose a lot of money with day trading as well, just as fast as you can make it. So, therefore, for my risk tolerance, I'm picking high growth long term portfolio where I pick stocks. I pick stocks, which is, I like doing that That's my risk tolerance. It might not be for you. So I really encouraging you to ask yourself, what is my risk tolerance? Can I afford to lose this money? Am I gonna survive if the stock market goes down? And based on that, I would pick one of these strategies. Give it like 10 to 15 years and see where you are. Keep learning and improving your investing knowledge about assets you own, and you will be well on your way to financial freedom and building long term wealth. Thank you for watching. If you are new here, my name is Yuri and I do regular updates on my high growth portfolio. So make sure you smash that subscribe button and turn on notifications so you don't miss my future episode. And also, let me know in the comments below what is your investing strategy. And if you think that my strategy is flawed, please, I beg you, please leave a comment and let me know your point of view, because I'm always on a constant lookout for the best strategy for me, right? I want to make as much money as I can, and also I want to document that strategy so other people can also benefit from this information. So let me know in the comments below, and I will see you in my next episode.